Good afternoon, everybody. My name's Julian Cunningham from Linklaters, and I'm very happy to be chairing our session this afternoon when we try to talk about something entirely different than what you've been hearing for most of the day. I wouldn't put it past Ajit and the other members of the team here to talk about coins, but we will be focusing very much on enterprise now for the next half hour or so. We have a fantastically diverse panel of individuals here to talk about enterprise. I've got to watch Ajit, he's getting lippy already.
It's like 3 minutes.
It's something like that. So what we thought we'd do, just to get a variety of perspectives, is first of all, if it's okay with you guys, if you could introduce yourselves, a little bit where you're coming from, and just tackle the first topic that I'd like us to talk about at the same time, which is, in the immediate future, are we going to see some real tangible deliverables in enterprise, in blockchain over the next 12 to 18 months? And then look a little bit more ambitiously forward, 2 or 3 years hence. And if it's okay, Marcus, can we start with you?
Yeah, of course, thank you. I'm Marcus Stewart, I'm Enterprise Lead at Applied Blockchain. Our specialty is developing private blockchain solutions. This means we don't really touch the public chain in any particular regard. And we've got quite an even split between corporates and startups. So to address your question regarding tangible blockchains, we've just announced that we're taking an application into production for Shell, which is quite a kind of major announcement. One of the world's biggest oil and gas companies actually embracing blockchain is going to become part of our core business systems. As for the rest of the sector, I can't comment too closely. I mean, I think if you listen to people like Tim Swanson, who've been around the block, there's just still a lot of issues with kind of off-the-shelf blockchain enterprise solutions and the need to actually integrate to everyone's systems. So I think it's going to be a question of what's coming out of the innovation department and whether business lines are actually going to buy in to what's coming from that.
So Richard Crook, I head emerging technologies for Royal Bank of Scotland. My day job is taking the shrink wrap off emerging technologies, blockchain being one of them, and seeing how they apply to improve the customer experience for Royal Bank of Scotland customers. I think to answer your question on that, if you look at what the FCA broke cover with late last year in October, was a regulatory reporting platform, and that was a piece of work that we did jointly with the FCA to show the regulator that they had a new tool in their toolbox to regulate us with, where before all they could do was ask for more data, or ask for it in a slightly different way. And now they've discovered that they've actually got a technology which allows them to push that regulation upon regulated entities, make a consensus, and then report the data. So you're seeing some real-world applications there. It's a very dry part of financial services, I'll give you that. But these organizations are slow to move, slow to change these types of infrastructure, and that's why it's taking time.
Thanks, Richard. Ajit, you've moved away from dry financial services into a brave new world. What's your perspective? See if you can get the mic to work.
I haven't actually. So I lead the enterprise delivery for Consensus in London, and I also spend a lot of time on financial services, use cases, and business development. So all of our customers have a production roadmap, whether it's oil and gas customers or government customers like the government of Dubai. And so clearly, a number of these applications will be going into production towards the end of this year, if not next year. I think what's interesting is this year is that until last year, we've had two disjoint worlds, right? The world of incumbents that are trying to protect the industry, make sure it doesn't change because of this technology. And then we have had this cryptocurrency ecosystem that's grown exponentially outside this legacy enterprise world. Now, two things are happening. These worlds are combining. So our enterprise customers are looking at tokenized business models. Then also institutions are looking at playing in cryptocurrency markets and cryptocurrency derivatives, for example. And then, so this artificial barrier between DLT and blockchain is going away, and we're seeing more push towards open ecosystems, which I'll talk about more later. But definitely, production is coming.
Thank you, Ajit. So looking at it from that perspective, bringing those two worlds together, Marcus, one of the roles in your company is to explain to enterprises how they can use your technology. What are the main challenges that they present to you, and how do you propose that those are overcome?
Well, I think a lot of these businesses are looking at kind of the influx of data, and there's a kind of rather tired phrase that data is new oil, however it's quite truthful. And they're looking at their future business models. So creating consortiums and networks between companies, being able to share data, cut down on costs, but also I think the key point is to kind of generate new revenue from existing business lines. You know, they're not trying to throw out the baby with the bathwater in this case or completely change what they're doing. That's the role of startups. In terms of the kind of tokenization that Arjit was touching on, I am seeing quite a few companies exploring tokenization for purely internal purposes. We're working at the moment with Vodafone, who've created an internal accounting token that's used by their group treasury. It's going to be used by 30 of their group companies. And then there are also some corporates who are venturing into the public token space. I think probably the most famous example of this at the moment is probably Kodak, which has been a lesson in kind of bullshit, among other things. Yeah, I would be really interested to hear what my co-panelists have to say.
Yeah, so I think if you look back a little bit, you know, we joined and brought together 9 founding members of what was the R3 Distributed Ledger Group, and that was a recognition that there's only so much fun you can have on your own with the blockchain. 2016 was largely about technical challenges and the recognition that many of the technologies, especially in the public space, were solving issues and challenges you have in a public space, not actually things you actually encounter in the enterprise space. And the enterprise also has other concerns. So we then set out to build a finance-grade ledger, Corda, and you're now seeing some of the projects starting to break cover using that new distributed ledger. And then on top of that, one of the major problems we've got is as you get closer to production and go live, what you're trying not to do is simply replace one centralized business model with another one. And the best example of that is things like the stock exchanges, things like the clearinghouses. These are intermediaries, these are market utilities. Most of them are monopolistic because of the network effect, and they cost a lot of money. That money is then passed on to customers, our customers, and if we're trying to reach the vision of cost efficiency and effectiveness using distributed ledger technologies, one of the things we're not going to do is simply spend a lot of money and time and effort replacing one centralized monopolistic market utility with yet another one. So it's important that when you look at any of the ICOs you're investing in, any of the companies you're looking at, working with, or any press release that you look at, actually are the clients of that intermediary working together, or is it simply a tech upgrade for that market utility? And for us, that decentralization of the business model is far more important and a bigger challenge for 2018 because it's about politics and people and social. It's not technical challenges. So 2016, 2017 were easy years. It was all about the technology. Now we've got the bigger challenges, which is how do we decentralize these business models?
Thanks, Richard. I came in here hoping to have a big argument with you, but it seems we are agreeing on something. It's absolutely correct, right? Decentralized business models are a force of nature in the sense that we've had years of centralization of internet, information, data with Facebook and Google sitting on everybody's data. And then we've had years of centralization of value with market intermediaries essentially retaining their monopolistic, whether it's DTCC or market or banks or exchanges, sort of creating this monopolistic position, and then a whole regulatory ecosystem having been built around it. But going forward, I think it's clear to a lot of people, including Mark Zuckerberg, that centralized business models have their limitations. We've gone too far out to the centralized spectrum. And then maybe there is a greater demand for consumer self-sovereignty, for consumers having greater control of their assets and information. So there is this far-out vision of decentralization where every individual is in control of their assets and information, and then there is the current reality where there is a lot of centralization of both information and value. Now, we're going to go from the side of the pendulum we are on to this decentralization pendulum, and blockchain represents that trend. But it's not going to happen if we create closed platforms which only create this, entrench the existing monopolies by tying them into a so-called decentralized ledger, which is operated by a consortium, which itself is centralized. So there is a lot more value in open ecosystems like Ethereum, and I'm not shilling Ethereum yet, but I will. In open platforms and ecosystems that not only create this internet of consortia, but also provide a way for these islands of value to be connected using an open blockchain network. So our vision is that there will be efficiencies in the enterprise thanks to consortium blockchains, but then these islands will need some way of connecting to each other so that value can be exchanged over the public internet.
Thanks, Ajit. And it's a noble dream, and I think from it's happening today. And from the perspective of an enterprise, a hugely regulated enterprise such as Richard's, where the supply chain is subject to crushing rules, the data it holds is subject to significant constraints as well. How difficult is it for a global enterprise to embrace an open architecture such as that? Maybe start the other end, Chair.
Okay. So look, I mean, I'm a technologist. There was a time when I used to watch movies on dial-up and people said it'll never work. Order CDs on the internet. It's too difficult to watch movies on the internet. But that's just the state of the current technology, right? The amount of capital that's gone into this ecosystem and the level of talent that's coming in from all over the world and creating innovation. So technology, I see technology as a force of nature. It tends to organize law and regulation around it. So while the current, and there is no economic reason for current enterprises to remain and retain the same structure that they have today. Sorry, I don't mean to sound like a crypto anarchist, but it's a fact that as we get better technology, the shape of current enterprise structures will change. The way we organize our value chains is going to change. So there's no reason for the banks to remain the way they are today, right? Technology will redefine how we work in various value chains, including financial services.
Evolve or die, that applies to the regulators as well, right, Richard?
In this industry, you're absolutely right. I think the most important thing to recognise is we have regulation for a reason. As an employee of Royal Bank of Scotland, I know that all too well. As an institution that gets fined regularly, it's part of being the club. The point about regulation is it's there, it's put in, and it's there because someone did something in the past that we don't want to repeat again. Every time we repeal that regulation, it happens again. And if you break the current crypto space into thirds, there will be a third of those people who don't want to be regulated. There'll be a third who are wondering whether they should or shouldn't be regulated. And then there's a third who are putting their hands up and saying, please regulate us, make this noise go away. And I can guarantee you that the regulator will regulate all three thirds, whether you want to be or not. And those that don't want to be, they will chase you down. And the SEC is obviously prominent on that, prominent right now. But we've always pushed and strived for better regulation later rather than poor regulation early. And the FCA continue for us to be an excellent regulator in that respect. They do wait, they watch, they learn, and then when they put the regulation out there, actually the regulation is what we were looking for. They listen from the rest of us and they take that on board. So I think that kind of covers us on that space. Regulation is actually the least of my worries. We have enough regulation. People just need to apply it and get on with applying it, and we will be in a better space if we don't want to repeat some of the lessons of history.
How about you, Marcus?
Richard, can I just echo your thoughts about the FCA, but also say that your and Arjit's last two round of answers both sound far too utopian and idealistic, I think, and I find myself in a strange place being the cynical millennial sitting with you.
It's got nothing to do with age.
Yeah, I think the impression I've been getting from consortiums, and we're not a member of any consortium, I know Consensus and RBSR, is that these are experiments which have actually failed at the moment. You know, you all clubbed together in kind of late 2013, 2014, thinking, shit, what are we going to do if someone comes and takes our breakfast, lunch, and dinner? But this kind of monopolistic tendency does remain, and these consortiums are now kind of breaking apart and people are coming back out to the market to actually explore their own independent blockchains, own independent applications outside of this decentralized fairyland you're talking about. I think probably with the kind of expected limitations on technology, I know Consensus, you're pinning a lot of hope on the public Ethereum network, and you have like a very kind of skilled and imaginative public DApp lab. But I think it's going to be these kind of small islands of decentralization, and we're actually going to depend on people linking up these blockchains. And I think we were commenting outside that there are far too many people doing just another blockchain. Well, I think people need to start looking at the kind of interchain, interledger tech that people are doing, like Polkadot, and actually think how we're going to support and sustain the networks that we do get. And there are kind of particular challenges about actually, once you've taken these applications in production, and you can comment on this, Arjit, is how do you get them out of a building? So if you're just hosting a distributed network on your own cloud infrastructure, what's the point of doing blockchain? But then do you actually trust your counterparties? Probably not, because they can do a consensus attack.
Yeah, I mean, sorry to sound like a crypto anarchist revolutionary again.
You're
That's
dressed
not
like
my
one as well,
background.
so-
I came from Goldman, Barclays, and PwC. That's my career. But see, it's a mistake to start with the enterprise, right? The purpose of the enterprise is to serve a customer. So, I mean, there is no reason the banks should remain in the same structure that they are in today, or regulators should remain the way they are today. And if they aren't the way they used to work before the internet became a thing, right? So technology changes everything. And then iPhones came to consumers before they were in the enterprise. JP Morgan was saying, we'll never see this in our enterprise. But then everybody is checking emails in the enterprise on their iPhones. Things have become much more secure. So, if I sound like a dreamer, that's because of the sheer force of innovation that's in this community. And irrespective of the short-term problems we are seeing around scalability, resilience, and certain regulatory challenges, people not exactly following the law in certain spaces, those are all short-term blips, right? I mean, fundamentally, there are consumer problems that we're looking to solve. And then enterprise will reorganize itself around the customers that are emerging. And decentralization isn't there because Consensus likes decentralization, or you like decentralization. Decentralization will happen because we've gone too centralized, and then there are customer problems that require decentralization, like my Aadhaar card was hacked. It's on a centralized database, right? Now, I hope nobody's selling my property with my centralized ID. So I need some level of control over my information. Regulators are moving in that direction with GDPR, right? So privacy is a consumer requirement. Knowledge-based authentication is a problem for customers. So there are lots and lots of market forces that are making the consumers start to think about decentralization, and enterprises will reorganize around this. So let's start with what the customer needs are, not what the bank needs or what R3 needs or Consensus needs. That's not relevant. What are the customer needs we are trying to solve?
So I think in answer to your questioning around the open protocols and the open technologies, we are grateful that the previous generation put open protocols and standards into the internet, which allowed actually the emergence of things like Facebook and Google later, or Netflix and Instagram to come later, and weren't locked in to an internet owned by one tech vendor. So take you back to the mid-90s when email was going out, Microsoft would have given their right arm to own email, and that all emails would have run through their servers. And when we went through a tech wave like this before, no single vendor ended up owning email. And now you work every day where inter-entity communication or inter-enterprise communication is done over email. Now, there's a lot of communication that you probably wouldn't want to do over email, and looking at most of your inboxes, you'd probably go, can we stop it? But if you take yourself back to the early 90s, before you were able to send email to colleagues to employees in another company, you suddenly understand what difference it made when we allowed communication into enterprise. You're now looking at a technology that is now going to start to allow you to do business process, things that you're trying to do on email today, sending spreadsheets back and forward. Have you paid that invoice? Have you paid this one? I thought you'd said that. All of those types of processes we're now starting to see emerging and being applied using distributed ledgers. That entity workflows is what you're seeing coming.
Thanks, Richard. And listen, a lot of the people here today will be interested in understanding how they can help enterprise customers consume their technology and manipulate it. What tips have you got, from both sides of that table, in terms of the key messages you have for them in terms of what they should be telling their customers about, their enterprise customers about their technology to help them break through into that enterprise opportunity?
I think this new phase of consumer adoption for distributed ledger technologies is going to be very, very difficult. Most people today don't actually know how to use a secure password or what a secure password is. They'll use their birthday or their dog's name or whatever. And now we're going to start trusting people with private keys, which potentially will hold all their wealth, hold all their data. So I think there's kind of going to be real, essentially user experience and design challenges, but also looking at the software and hardware requirements as well for, okay, how do we actually recover your keys when you've, you can't remember your password, that kind of thing.
If you guys don't fancy it, how about, we've a few minutes left. We have our own mini enterprise sandbox up here. So if any of you guys out there would like to ask any questions, if you guys are feeling brave enough, then do feel free to raise your hands. Don't be shy.
We've got one.
Gentleman over there at the back.
Governments potentially could put in any surprise legislation this year in regards to blockchain and cryptocurrency that we're not expecting?
Not the UK government. I think if you're certainly looking at Eastern Europe, I know Estonia already actually has a reliance on a kind of distributed ledger-like technology for a lot of their e-identity. Lithuania as well is also looking at a kind of national fintech platform, although we don't really know what that's going to look like yet. Apart from maybe, I don't know, someone was telling me about some anarchist island called Sea Island or something. Maybe some kind of joke country will implement regulation.
Probably not an enterprise focus.
Lawmakers don't usually surprise me. They are quite methodic. You were asking if they might surprise us. Lawmakers are traditionally known as politicians, and in most countries they're voted in, and they don't usually like receiving letters from their voters saying they've lost their money in an ICO sale or something else. And I think what you need to be aware of is that type of regulation will come fast and furiously from lawmakers when their voters are losing money. And they will push the regulator, the government agency of whichever country or jurisdiction you're in, hard if they start receiving many letters. And so if there isn't regulation there to look after those retail customers, the unprofessional investor, then they will put it in fast. So there's probably no loophole here. It's just a matter of how do they apply that regulation quicker and better.
So a couple of things. I think the FCA is exactly right, when they say that we regulate market behavior and not technology. We regulate the activity, not the technology. And the technology will change with time. But the principles that the principles-based regulation, as in this country, is quite stable in face of those technology changes. As far as the SEC is concerned, they have a very mature securities market law that has evolved since 1934. It's been around 83 years. If a lot of crypto issuers are not aware of that, then it's not the regulator's fault. I suggest we should all educate ourselves. And to some extent, the regulators are also looking to make sure they don't enforce the regulation in a way that restricts innovation. It's quite important. The SEFs, we spend a lot of time with regulators, and they're fully aware of all of those. But in terms of whether there will be new regulation, I doubt it. But in the way it's enforced, I think regulators will be aware of the sort of balancing the need for innovation with the need for consumer protection.
Thanks, Ajit. Listen, let's try and squeeze one or two more. Is it Peter?
So, Richard, I strongly disagree with your statement about regulators. I thought that was incredibly courageous of you to say that they're going to have a chance to regulate every aspect of this industry. How do you regulate something that is sort of everywhere and nowhere all at once in a distributed ledger all around the world in different countries? How are you going to stop me investing in whatever coin I want that has been released in some tiny country that's outside of the grasp of the wonderful regulator that you have to speak to every day at RBS?
So the lovely thing about this is I'm not a member of the FCA, I'm a member of the Royal Bank of Scotland, and that is their challenge, not mine. And that's the lovely thing about working inside a commercial bank, not working for a regulator. I saw the SEC's chairman's speech a couple of days ago. I think he's given you a pretty good steer as to how he is intending to move forward. And as a commercial bank, I certainly, as an employee of a commercial bank, am listening intently to what he has. It's definitely his problem, and he's definitely grasping it and working on it. I absolutely agree with you. That is the challenge, as you well articulate it, is how do you deal with such a decentralized distributed problem, which now covers multi-jurisdictions. It's a real good problem for them in 2018.
Just a quick comment on that is it's not that complicated, right? It's a network. You have to open a port onto a server. I can stop you from, if you're not in a Tor browser, I can stop your blockchain from working if I'm inside China. And I can block the on-ramps and the off-ramps to the crypto space. I can stop you from withdrawing money. If I'm Homeland Security, I can actually do a lot of data analytics and monitor all your activities without you knowing. So I don't think we should draw a lot of comfort in the fact that the regulators cannot monitor activity. They can. They have the tools for it. I think what we should look to do is work with the regulators to create a safe and sound blockchain ecosystem and make sure that consumers' interests and investor interests are protected while we also continue on this path of innovation.
Thanks, Ajit. I think there's one more question down here.
So for a couple of years now, we've been hearing about this is the year of blockchain. And it never quite has got to that full production scaling stage. So assuming that this is the year of blockchain, what do you see as being the biggest barrier to adoption that we have to overcome? Is it around central banks issuing their own cryptocurrencies? Is it around regulators suddenly legitimizing this space, or something else entirely? In your opinion, what is the final big hurdle to then suddenly everyone starts using this in full-scale production?
Oh, is that for me?
Who wants it?
Oh, sorry, I
You're
didn't
looking wrong
realize
way.
it was for me. So, I mean, it was last year not the year of blockchain. I mean, the market value of all cryptocurrencies today is 526 billion. I didn't expect it, and I wish I had. Right? So, I mean, we're looking at an early stage technology. It's maturing quite at a hockey stick. Things I can do with Truffle today on Ethereum in terms of speed of deployment and development I couldn't do 6 months ago. So I think we've only been doing this for 3 years, right? Before that, there was only Bitcoin. So we've come a long way. And if we give it another couple of years, I think we'll start to see V.Trade should be going into production, the digital trade chain work that IBM guys were doing in Q1. The number of Smart Dubai projects will go live this year. I mean, Richard has been doing amazing work in the RBS lab. So it's all coming. We tend to be slightly impatient and underestimate the impact, overestimate the impact over the short term and underestimate it over the long run. But let's go through a couple of bubbles and let's see what comes out on the other side. It's going to be amazing.
Yeah, I think you'll find that the internet was called a number of years in the 90s, and what we're actually seeing is a nice slow growth through this technology. As Ajit points out, it's accelerating. We're starting to see proper finance-grade technologies, so the technology solutions or the challenges are being solved, and now we're into some of the gnarlier social problems around how do you decentralize the business models and don't just end up with what you had before.
I think if 2018 is the year of Trump coin, it'll definitely be the year of blockchain. So.
Very good. Guys, how are we doing for time? Are we out? Okay. There you go.
Thank you.
Well, all I need to say is thank you very much indeed, Marcus, Richard, Ajit, fantastic panel.
Thank you.